timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
And welcome back to the Chapman Business Reports, our weekly look at business, the financial markets, and a special focus on the regional economies of Southern California. I'm Pete Weitzner. I head up the broadcast journalism program, housed actually at Dodge College as we shoot the show here on main campus. We're just a couple of blocks west. Also just behind me for 34 years, we've housed the good doctor, Dr. Adibi, over at the Anderson Center, where he and Jim Doty crunch out the numbers for their very widely watched annual economic forecast. Welcome back, boss.
Thank you.
We're going to talk about the latest numbers, some improving numbers on jobs. Earnings continue to be strong. We'll focus especially on some Orange County companies. Tourism got a nice boost as well. And then we'll duck in a student feature story, efforts to save a local, it's not a Starbucks, a local coffee shop here on campus. But boss, let's start with the numbers. And the economy's been front page for 4 years. It's still front page, but maybe for the first time it's even slipping a little. There's other stuff going on. There's some religious squabbles between the administration. But one thing that points to me is that, I don't know if folks are getting complacent. The numbers aren't wonderful, but they're not bad. We'll start with the growth in the economy. Fourth quarter, almost 3%. That's, again, not bad.
Oh, that's the best that we got over the last couple of years, 2.8%. Although, you know, again, we always have to warn everybody, don't get too excited.
Because it was fourth quarter, Christmas shopping.
And you have to look at the components. You know, what really contributed to 2.8%.
Business investment,
Business investment
spending
was the star. Consumer spending wasn't as strong as we were hoping. But the main factor that contributed to that was change in inventories. You know, there were lots of rebuilding going on. You know, retailers didn't order as much during, you know, third quarter.
Sure.
So once they saw the consumers are spending, they started rebuilding, reordering, and some of that inventory buildup also helped. But no question, business investment was very strong, and consumers are shopping. You know, we said this over and over at our shows, you know, in the past, that don't write off consumers. They're not going to increase in spending by 5-6 percentage points. But if they do 2 to 3 percentage points, that's what they're doing. That's good enough.
We know they don't feel the wealth effect from their homes yet, but they probably feel it from their 401ks, and that's helping.
Oh yes, you look at three components. One is job creation, is picking up some steam, and then you look at the stock market. Relatively speaking, did okay the fourth quarter, so that gives good feeling to people. And home prices, although still are depressed, they're not collapsing 10-20 percentage point, and you get used to it in a way.
Right, and the consumers got room on their credit cards now. They've been rebalancing.
They're building up credit. Actually, that's part of the little bit of a worry, because they were very cautious adding to debt, and the last couple of months,
some of the biggest spikes we've had in a long time.
They're putting it on credit card.
Exactly. We're back. But government spending is the laggard.
It is a laggard. I mean, you expect that. Federal government still has some juice. They're spending. They're increasing the spending. But when you look at the state and local government, still they're depressed. And we're talking about all the states, not just California. So when you put the aggregate together, government is going to be a lagging, you know, factor when it comes to GDP numbers.
2.8% in the fourth quarter. We go into an election year 2012. The Fed's forecast is anywhere between 2.2 to 2.7%.
Oh, they heard our forecast.
I was going to say, seriously, those numbers are right with what the Chapman forecast.
Yeah.
And the jobless rate they see, and we're just about at it now, they see by the end of the year 8.2%.
Yeah, it could be even a little bit better. It could be 8%, but we got, you know, a fast, sharp drop in unemployment rate last couple of months.
By one full percentage point.
Exactly. So we think that's not going to be sustainable. What happens typically when recovery gains a little bit of a momentum, those discouraged workers are going to come back.
Sure.
And then bump up the unemployment rate. And again, although job creation is pretty good, it's not good enough to make a significant dent
in
in
it.
it.
Underemployment, folks who have given up or are working part-time, want full-time, that's kind of stayed the same.
Yeah, that's a major problem.
15 to 16%.
Because when you call somebody employed, you know, that means they're working at least 1 hour a week for pay. And we know lots of people are working 5 hours, 10 hours. So if you look at underemployment, you're talking about unemployment rate close to 16%, rather than, you know.
Hardly out of the woods. We record this mid-February. A lead story, Pepsi's cutting 9,000 jobs.
Yeah,
so
because
that's still happening.
It is, yeah. But that's not unusual. You know, even in go-go time, when we were going through the boosting economy, firms always are trying to redirect their operations operation, control their costs, reducing costs. So that's not surprising.
So looking specifically at this jobs number, as mentioned with the boss, that the rate went down 8.3%, a drop from December and January. 243,000 jobs.
That was impressive.
Net, that's the most impressive.
That was very impressive, because most economists, our estimate for the year, for 2012, is on average, we're going to do about 165,000 jobs. And 240 is way over 165,000 jobs. Now, whether this is a trend, is this going to continue or not, that's really questionable, because economic growth, as I mentioned, 2.8% fourth quarter, we don't think that's going to be sustainable. More or less, we're closer to 2 than closer to 3. And if you run growth roughly about 2.3, that's what our forecast is, you're going to get job creation about 160, 170,000 a month, which is lower than 240,000.
Right, and to give it some perspective, if we continued at the rate that's forecast, you think Fed might be overshooting a little. We'd go through 2012, and only then would we have gotten back half of what we lost.
Oh yeah, we lost, during this recession, we lost 8.6 million jobs
and we've
at
gained
the
back
national
3,
level.
a little over 3.
And we're going to be close to 5
Right.
if this pace continue. So by the end of 2012, we still have 3.5 million people who lost jobs during this recession. So we're not out of the woods yet.
But we gained some jobs in a lot of sectors, the usual professional business services,
Yes,
tourism,
that's what you expect.
And even construction.
Yes.
Hollywood lost 8,000 jobs. There weren't many negatives. One of them was Hollywood.
Yeah, one of it is competition. You know, if you look at even Canada is competing with us in filmmaking business. They're giving subsidies and make it cheaper and easier for them to produce somewhere else.
New York.
So it is really tough. Yeah, some of the Midwest states, they're trying to do that.
Orange County also we're down below 8%, 7.8%. Total jobs in December were up 1,300. I mentioned professional business services, education, and health.
And construction, and we got a little bit of a construction on year-over-year basis.
Year-over-year we did,
See,
yes.
the figures you're referring to, they're all monthly figures,
Sure.
and we usually look at those, but we don't put that much weight on it.
So you see even residential construction?
Residential construction is coming back a little bit, mostly multifamily. It's coming back, and partly because we know what's going on. Lots of people have bad credit; they cannot buy another house, so they're trying to rent. And there's a stigma, negative stigma in buying homes, so they're renting. So builders are responding to that.
Right, and then by comparison, we still have, this state is second highest. I think Nevada is the only one with a higher jobless rate. Los Angeles, among the highest in California. What's going on there?
Unfortunately, if you look at some of California, we mentioned this in previous show, California is divided into two now. It's not north and south. It is western side versus eastern. West, coastal counties, they're doing much better. And Los Angeles, the part like West LA is doing fine, but when you go inland, they're not doing as well because there's not that many diversity in terms of job creation and firms being there. But if you look at San Diego, Orange County, and then go up all the way to Bay Area, those economies are doing much, much better.
Sure, and one thing they're benefiting from is tourism.
Yes.
It's become a bigger engine of growth here
Yes.
in California and Southern California. Visitor spending up 5%. Attendance, and here I'm looking at Orange County, was up 1%. Anaheim, of course, leading the way. And I look at the Disney numbers now. A lot of this is ESPN profit. It's not movies. We got tough time with their
theme
movies.
parks too.
The theme parks did very well.
It's understandable. Consumers. You look at gas prices are so high, so you're not going to travel
Staycations,
far.
right?
You stay around, and even when you look at your income is not growing fast, you're not going to go overseas. For travel, so you're traveling here. And again, remember last year Euro was very strong, and that helped us. And look at Japanese yen; it's at historical high.
Right.
All of that makes tourism very attractive for foreigners to come here to California, or for that matter to Nevada or New York, and that's what we're going to benefit from: domestic tourism and international tourism.
So we look at big picture to see how close are we getting to normal, to a growing economy that's producing jobs, and we see the job listings are up. At one point there were 7 applicants for every 1 job. Now there's 4 for every 1 nationally. Consumer sentiment, which is very important. I know you don't value it quite as much when you do your...
No, actually, if you look at today, the consumer confidence came out and it is down.
Well, that's why you don't value it. Okay.
See, it just zigzags.
And it's well below what we want for 100 is in the index, and we're still in the 70s.
Oh, yes. I mean, you're just pointing some of the good development, and there's no question. Jobs, there are more job opportunity. But till we get the housing market settled, That's the key factor.
And home prices, let's look at those. They're still, and of course, I think there's a big worry too, perhaps not on the average consumer, about what's going on in Europe. But you're right about housing. Prices are still falling.
Yeah.
Now, we had a little jolt. We had the buyer credits, and that helped. And,
yes.
But even here, we're falling down a little. And nationally, only 2 markets, I think Detroit was one of them, of the major 20 markets, prices went up. So the last 12 months, home prices on average down 4%. New lows in Seattle and Atlanta.
Yeah, see, that's what the problem is. I mean, when you look at the previous recession, we go back, we had 11 recessions since World War II. And every time we had a recession, what brought us really
housing.
Strong housing. And this is what the
Or
problem
war.
is. Oh, no, not that much, because, again, war as beneficiaries are sometimes outside the countries.
We were switching to a manufacturing economy.
Exactly. So what happened, if the housing is not there, it's not going to give you that oomph that you need to really, because it has a huge multiplier. When you build the new homes, that's not the end of the story. You have to fill it up with furniture, appliances, do landscaping, put the patio cover. All of that multiplier is absent. And unless we get decent housing market, we're not going to see, very strong job creation, and that's the part of the problem.
However,
now, when do we get housing recovery?
The trend be your friend. Home builders, in fact, there's a big convention going on as we record this.
Yeah.
Their index of their confidence,
they're more
25.
There's a little
50
bit of a,
is good. That was 2006. But that's the best reading since 2007.
Yes, but everything is relative. It's the best reading than a horrible year of 2007.
Which means they might build a home. Look, the Irvine Company here is building homes.
They're building homes. Look
in
at
Irvine.
It. Public builders, those who have access to capital, either through stocks and bonds. I mean, whether it's a Standard Pacific, actually they came out with a good number. KB Home, Toll Brothers. These people who have access to capital through different vehicle than borrowing from the bank, they have now cheap land on their book. And because they brought the price of those land, they impaired it, and it's cheap, and they're building homes, and if they target it to the right market, they can make money. So the optimism is coming from that side of the equation. If you look at private builders, somebody who has a small operation and needs to borrow from the bank, if you talk to them, they're the most pessimist now in the housing market.
Because for one, you need job growth. People need to be confident to make the investment. Competition still from the shadow inventory and all the foreclosed
homes.
And then
financing for a private builder is extremely difficult.
Most people have to put 20% down.
Yeah, exactly. So that's what the problem is. So going back to the job numbers and the fact that you mentioned, by the end of this year, are we going to be back? No. And when are we going to get back there? We have to slowly, creep up in this path till the housing market, basically settles. And unfortunately, we did some estimate at the center. We don't think really you see across the board recovery in housing market till 2015.
Which would mean we'll limp along at 2 to
3 percentage point.
But that's a full 1 to 1.5% when you get housing going.
Yes, barring any unexpected event.
China's slowing down. You concerned?
I'm a little concerned, but it's understandable. China, we always look at China as our major trading partners, but they sell tons of goods to Europe. And Eurozone, because of the mess there, they're all practically in recession. So demand for Chinese products has gone down, and it's just slowing down their economy, which is not a good news because, believe it or not, we sell lots of goods to Chinese too.
We still have a deficit, but we're selling a lot more to them. Their middle class is growing.
Exactly, so that's a big drag. But that's kind of expected in the equation. Everybody expected Chinese not to grow 9.5%, maybe about 8.5%. The concern is if the situation in Europe gets really bad and it spills over in North America, then Chinese growth could really go down significantly, and that's a worrisome.
Quick explanation and significance in your view of this. We had the settlement on this signing deal with foreclosures. What happened there? Is this significant? Is this going to affect the housing market? Help folks who are trying to stay in their homes?
Yeah, it's not going to, at the margin, it's going to help a little bit. I mean, you're talking about $25 billion. That's one way or another is going to be channeled into households,
not a small amount
finances.
Of money.
No, but for example, people who lost their home to foreclosure, they're going to get $2,000. Is that going to help housing? No, it's over now for them. But they're going to do some refinancing for people who are underwater, and they're going to basically help loan modification. So all of that is going to help to some extent. But again, everything, we said it over and over in this show, everything goes back to the job market.
Sure.
If we don't get job creation, then the housing demand is not going to increase. And if that doesn't increase, then against huge supply, you're going to have depressing prices.
Sure. Last thing on the
term.
overall economy, and then we'll look at some corporate earnings, some of the tech companies.
They're
Apple
doing
made
well.
$13 billion in one quarter. That might be a U.S. record, but President made State of the Union speech. Does he have anything? Does the administration have anything, federal government, left in the holster? I know it's an election year, to give a jolt to the economy.
No,
maybe
I don't.
continue the 2% reduction.
That's all it is. As we are taping this,
They're
they're talking
negotiating
about
that.
it. There's 6 more days left. I bet you they're going to extend it. That's a 2% that we're not paying in terms
Right.
of payroll taxes. And of course, if they extend it, that's another $100 billion that is coming to the consumers, and it's going to help consumer spending. But I think they're more or less done, and we have to wait. What's going to be the result of election, and who's going to be in the office, and whether they're going to actually pursue cutting the deficit and really reducing spending, which in a way is going to be a drag on the economy.
Right.
Could be as early as 2013 and 14. So at this point, we don't see any other stimulus coming from the administration.
Well, and we should just, before we hit earnings, we have to talk about what's now become the 800-pound gorilla in the room, and that's Europe, starting with Greece, and really still no deal there.
It is really, actually, it is. I am very disappointed. They know exactly what they're supposed to do, and unfortunately, they're not doing it. I mean, I'm talking about the entire Eurozone, whether they're Germans, French, and Greek. The problem, we all know what it is. These countries are paying huge interest rate on their borrowing. I'm talking about Greece. I'm
Right.
talking about Italy.
7% on short-term money, I think.
38% on 10-year for Greece. I mean, we know they're going to go bankrupt if they have to pay that rate. Now, how are you going to help them with the austerity program? Sure, you can demand that. But ultimately, I said it before, the ECB, European Central Bank, or they have to come up with a Euro bond, or ECB basically lend some money to these countries, which means they have to print money, which means they have to change their treaty, and they have to do that. And if they don't do it, and unfortunately, the more it drags, it's going to become a bigger problem for us, because again, you see a stock market. Good news comes, the stock market takes off.
It's trading on Europe, clearly.
Exactly, because fundamentally, if you look at the stock market with the low interest rate environment, it should be way up.
Unless it trades on occasion on Facebook, it trades on Europe.
Yes,
So,
yes.
Would you buy, by
IPOs.
the way, second quarter IPO? Would you buy Facebook? Looks like
I'm
they valued
always,
the company at $100 billion.
I'm sure you can make tons of money if
In
you
the short
can get
term.
the IPO.
A lot of folks will sell. A lot of all those, they've got hundreds of folks who are waiting to be millionaires.
Actually, funny, a state government or a state is counting on that IPOs.
Oh, sure,
Because of the capital
gains.
gain. Exactly.
Absolutely. It's
But
all
usually
California.
on these things, it spikes up and then it settles down. And that's a very competitive industry. I mean, there are a whole bunch of other people who want to get in that line of business.
Sure.
And eventually that's going to show up.
All right, let's talk about corporate earnings. Pretty good in the fourth quarter, although the banks were kind of mixed. This will please the Occupy folks, if they noticed. For instance, J.P. Morgan, revenues are down. How come? Down 20%.
They have what we call interest spread compression. What it means is long-term rates have gone down. Banks make money by getting your money, your CD or whatever
Right.
you have, pay you a little interest and lend it to other people at the high interest in long term. But the long-term rates, because of the Fed operation twist,
Sure.
is very low. So the spread has narrowed. So their profitability is going down. Plus, another thing which is kicking in is the fees. They used to collect lots of fees on debit cards.
Retail transactions.
Exactly,
and those
they're
were
not
cut.
getting that. So their revenue and profitability is under pressure, no question.
B of A doing better, but they're slimming down, and basically they're getting out of some businesses.
Yeah, you look at their tier capital is improving, tier 2 capital,
Right.
but that means that they put less money for bad debt. Their allowances are shrinking. That is, they're getting more confident that they have enough money there, and they're improving. But if you look at their profitability and also revenue, is under pressure.
You talk about our coastal economy here in California. Apple made $13 billion in the fourth
That's
quarter.
innovation.
Now is a market cap. I need to update my graphics every half day. It's $450 billion. It's the most valuable company, I think, in the world now.
Probably, yeah.
Shipped 37 million iPhones in the fourth quarter. eBay doing well. Their
That's
profit
the
was
Christmas
up threefold.
Christmas shopping.
Google, what? They have a net profit margin of over 30%.
That's incredible. That shows how
And-
advertising is moving from print to online.
90% of their revenue is from ads. And they added, people want to know, how are we pushing down unemployment? They added over 8,000 workers.
Oh yeah, that's the growth area. We know what's going on. Everybody's going online, everybody is using electronic gadgets, and they're taking really good advantage of it, and they're still the strongest search engine.
Sure. And big oil still doing well.
Oh, of course.
Because at these prices.
Look at the oil prices.
So ExxonMobil, the biggest, they made close to $10 billion.
Yeah.
This has been a concern of yours because I guess we've learned to live with $4 gas, but you think it is potential, obviously, depending on geopolitical events.
It's all geopolitical. I mean, at least we have $10 to $20 in price of oil, which is due to uncertainty about what's going on in Iran. Now, Egypt, you hear some noises. They're a little unhappy with us that we're giving them billions of dollars. So all of these uncertainty
we
in Middle
might
East,
want to stop on that.
Well, I'm always for it.
Right.
We should have stopped giving anybody any money. We need it here. But when you look at what's happening in Middle East, that premium is built in oil prices. And if things get messy over there with Iran, I mean, that would be a big concern of mine because we don't know what's going to happen to oil prices, and gas prices are critical for consumer spending.
Okay, a couple of quick things. Did you happen to notice over the past weekend, the Giants won the Super Bowl?
I know you're the fan.
I'll send you a bunch of pictures from the game just in case. I know you're cranking
and
your
I know
model.
you were there. You must be a rich man. I always had that suspicion.
You get a little older. We both hit our 30s. You still have your one indulgence in life.
30s.
For me, it's the New York Giants. I know you drink coffee.
Yeah.
Thank you very much. We take credit. At home games, we do. I know you drink coffee. Do you ever go to this local
Yes, I
independent?
tried it a couple of times.
Well, it's
Excellent place.
Speaking a couple of times, been a couple of efforts to keep an independent coffee house here in Old Town going. We'll give you that story with Kim Weitzner when we get to our student features. Boss, thank you as always.
My pleasure.
See you again next week. Stay with us. More on the Chapman Business Report. Final segment on the Chapman Business Report. Pete Weitzner joined by the boss, Dr. Essie Adibi. He stayed around because it's a story about coffee. It is time for our student feature stories. Right here in town, in Old Town, we have the Chapman Coffee House. It's not a Starbucks, but it is close to campus. It's been a tough go to make this independent coffee house a go. Kim Weitzner talks about the latest effort.
The Chapman Coffee House recently closed down after its former owner was unable to afford upkeep. Fortunately, two parents of a Chapman student reopened the coffee shop located at 505 North LaSalle on December 1st. They filled the void of one of their long-lived dreams while filling the cups of devoted customers.
I have a 16-ounce coffee with soy.
One of our spiritual principles and our belief is service to mankind. Anybody can put a cup of coffee in front of you, but the attitude by which they offer it to you, it's a whole different ball game. Can make your day or not. And we also chose a state-of-the-art super machine that will do your espresso and it will be perfect every single time. If we have someone that comes here, leaves here with a smile, we're happy.
The local coffee house is known for its comfortable feel and affordable prices, a favorite duo for college students. With free Wi-Fi and delicious treats, it becomes a home-like haven for everyone during the stressful weeks of finals.
I really like the atmosphere. Like the library, I feel like sometimes it can be really hard to concentrate because it's a library, if that makes sense. Like it's kind of easier at a coffee house because it's just more relaxed and less stressful.
I think it helps and adds to Chapman University, even though it's not really affiliated with it. But I think it helps and gives kids the option to come here and study, like I'm doing.
In support of Chapman students, a television will be added where students can exhibit their films and photography, as well as a wall to display student artwork. The Chapman Coffee House is continuing its bold taste community, and hopefully with a new owner, spirituality, and high-quality additions, it will start off stronger than it left off. Outside Chapman Coffee House, I'm Kim Weitzner, Chapman News.
We wish the new owners the best of luck. I know the boss is headed over there for a double or triple espresso.
I love competition and I love
Absolutely.
coffee. I didn't want them to disappear.
And all else being equal, we like nothing against Starbucks and the chains, but
competition.
People like competition and independence. As always, my thanks to you for your great insights on the economy.
My pleasure.
And Jeff Cole, class of 2001, his crew, they do everything on the Chapman Business Report. And to you, thank you very much for watching. Back again next week. Another look at business, the financial markets, and a special focus on the regional economies of Southern California. We recorded this a couple of weeks out, but just in case you were like the boss and you were real busy, the Giants won the Super Bowl. That's our fourth. Thanks for watching.
Funding for this program was provided by Chapman University.